Okay, traders, good afternoon. Quick recap as requested in regards to the majors, where they're positioned and what we're looking at moving forward this week. Price is in and around that 103 mark. Initially was our intraday target. We was looking for a 100-point move, which tied in with a move in euro as well. Price is just hanging in and around there as we speak. Highs are 102.94, so we're not far off that. And just to really break down the beauty that we had this week was that 4-hour core opportunity in here. As you can see, a couple of cycles broke through 101.50 MA crossover. That indicated that momentum was heading to the upside. The weight of the market was in our favor, and we've kind of got the license to then start planning trading opportunities across our other major currencies. Well done to everyone who actually took the dollar index trade and the euro trade, of course. There has been some other opportunities on smaller time frames since then, but having the patience to sit tight Monday and then execute this yesterday was fantastic. So well done, everybody. And how we identified that on the break of 101.50, that's when we look to go long and look for these bullish dollar opportunities, which does tie in seasonally and with other fundamentals taken into consideration too. We did get the pullback into 102 off that 20 moving average, which is typically our guideline to look for a turn in the market when phase two pulls back into the 20 exponential moving average. Bullish price action to confirm buyers are back in. We're not trying to outsmart the market, outdo the market. Let the buyers show you the way and jump in, jump out as momentum continues. So that's exactly what this low test bar indicated, followed by a huge bullish engulfing candle. Back up we went. 4 hours later, you're 40 points in front. Price range for a few 12 hours. I was about to say a few hours then. And then we got another bullish continuation candle this morning. So just be aware what we're seeing now. You can see sellers are throwing price in. We're now sitting on an indecision doji candle as we speak. This bar here, yes, it's bullish. Yes, it's big. Can typically be a sign of exhaustion. The biggest continuation candle in phase that's not at the beginning of the move, i.e. here, can be classed as a sign of exhaustion. A previous example is this on entry, continuation, later into the move, exhaustion. As you can see, great opportunity to take profit on an exhaustion candle, followed by phase two, and back up we went. A lot of new traders, and this is something to really think about, a lot of new traders are thinking about where they can buy after seeing such a huge bullish candle. Believe me, it's a sign of exhaustion. Take a step back, understand where you're positioned, sit on your hands, next cycle, back in you go. And this is something we teach on some of our courses. So anyone looking for further knowledge, education, support in regards to price action and advanced price action, just reach out. We've got lots available for you guys, but 103 is the key mark now, guys. So look, what we want to see is, I would like to see today breakthrough. Get that push, get that breakthrough. I know Biden's currently speaking in regards to US debt as we speak, so who knows? Could see a bit of movement. A cycle above 103, and we'll again look to continue trading that move. You've got several levels, softer levels throughout this period, and 105 would be the real upside potential in my eyes. But I do believe we are going to continue to see a strong dollar. Something to also bear in mind is you will get cyclicity and trend-based trading opportunities on the smaller time frames, i.e. 1 hour, 15 minute. But make sure that you've got higher time frame confirmation. You're working from top to bottom. Daily showing you the way, 4 hours showing you the way. Smaller time frames provide more bars, more cycles, more opportunities. But have the approach to get in, get out, smash and grab, just following the higher time frames. That's just safe bet if you are looking for dollar and of course euro shorts in the near future. So on the flip side, of course, you can see that we did start to get cyclicity to the downside. There's our beautiful cycles. Off we go. Price pulled back into 1.0900. You got our first seller's confirmation candle. Sell stop below, stop loss above the high. Let price action do the rest. So again, something that was pretty obvious if you are a core strategy trader. I do want you to consider, just like we looked at 105 as a long-term opportunity, I want you to consider the 200 moving average. And there's no harm in working out what sort of softer levels are in and around that area to see if price does pull back into this move. You've got over 100 points in play there. So definitely something to think about. But please, 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 new traders, stop diving in at the end of a run. Wait for market to cycle, pull back, and back off you go. If you work with us, you'll know what rules we use in regards to measuring cyclicity, cycle repetition, length of phases, and so on. And this is something that we can work with any of you interested in obviously progressing and learning further. That's where I am at in terms of dollar euro. My first two currency pairs I always analyze just to give me a weighted average on how the dollar's performing And of course, euro being the most traded currency itself gives us a bit of information in terms of what the rest of our majors are up to, and it leads us on to our cross currencies. So if I understand that the dollar is incredibly strong, I'll be looking for dollar strength across the board, which without even looking at a chart, you immediately want to short euro, short pound, Aussie, Kiwi, buy dollar CAD, dollar Swiss, dollar yen, dollar Singapore. So of course that gives us our base to work from. And I personally trade a momentum smash and grab in and out fast paced style, typically in the mornings. And my strategy is heavily focused on what markets are strong week. We really need to understand that two strong currencies, yes, we may think it would go through the roof. It really doesn't. Two strong currencies fight each other. They butt heads, and they cannot get the better of one another. So we really need one dominant strong currency, one weak currency, put them together, and that's where we'll expect to see some direction. That is the first task any momentum, short-term, intraday smash and grab trader that trades in the morning or in and around the US session. That's the first task you need to be doing. Have a notepad, write it down. We use a currency strength matrix of a higher time frame as well to look at last week. What was the weakest and strongest currencies? That helps us put together a bit of direction in terms of understanding what markets should progress or should move forward the following week. It also tells us if a market's hit extreme strength or extreme weakness, which again is typically signs for reversals, which we then tie in our rules, our price action, everything else to give us top quality, high probable winning or high probability of winning trade setups. And again, when a reversal takes off, we then use our smaller time frames, which provide more bars, more cycles, more opportunities to get ourselves in and out. So while the smaller time frames are messy because our 4 hours in that transitional period as we speak, it's key to really sit tight on the 4 hour until you get a break in market structure to confirm the change of direction, or again if we start trend following again, which then gives us the license to drop to the smaller time frame. So something to always think of, guys, and take into consideration. 124, huge level for pound. If we are following the approach that we may see dollar strength, and again, this is just to move up to a daily time frame. We're just in that change of equal number of buyers and sellers, change of volume, if we are looking for that pushback below. But as we can see, price sat on 124, rejected. And if you go back further in time, you'll see 124 is quite a strong sticking point. So what we really need to see is a continuation of cyclicity. All the time, price is just in a phase 2 pullback here. We need to understand who's really in control here. Are sellers bringing price lower? Are buyers looking to take price higher? So this is pretty much off the cards for shorts until we break 124. If we do, you've got lots of opportunity to really look at some fantastic rewards here in terms of identifying the correct cyclicity, timing your entry well. And again, if you're a longer term trader, let it sit, let it roll. If you're an intraday smash and grab trader like myself, get in, get out as many times as you can, subject to your rules and criteria being met. Again, the most amount of money is at the start of the move, so you can fill your boots up if you know what you're doing in and around these key areas. Also looking at Aussie dollar as well, we have broken the low, so it does confirm that selling action does want to continue to take place. But I want you guys to really look at this, and I'm just going to draw this roughly now. Look at this area here as a bit of a no man's land. Price could bounce in between, but breaks below, and again, you've got 66. If price breaks 66, this is really going to open up the doors for shorts. And again, 68 is upside potential. So you've got a 200-point range from top to bottom, but I want you to focus on this shorter-term range. Look for a breakout in here. We may even get a shorter-term opportunity on a 1 hour time frame, which will give us a better risk to reward into 0.66, which, as we can see, is a sticking point. Softer level of support, break that, open up the doors to a lot of downside opportunity. And you can see that 200-point range on a daily is really being worked, should we say. It has been worked this year. Kiwi's quite similar. Kiwi I don't actually like at the minute, but again, we want to see a breakout. This is a fantastic move, as you can see here, back to 1062. But for me personally, that there shows far too strong of buyers in a phase 2. Remember, when we're selling, we see strong sellers, weak buyers. Strong sellers, weak buyers. And that allows us to continue progressing and trading with trend. If we start to see strong buyers in a downtrend, and remember, this is only the first cycle. It's not a sign that, or it doesn't give us that heads up to want to take action, get in immediately. We want to see weak buying. We haven't got weak buying in this area, so not for us. If we take a look at dollar Singapore, again, we're just trapped in a bit of a wedge at the minute. 134.50 is the sticking point, but I still believe we'll see dollar strength. So what I want to be looking for is price above 134.50. We've got areas that price needs to break. The first area price needs to break is here to create a higher high and start to show cyclicity to the upside. Intraday opportunities for me are going to be when we break this high. That's obviously the daily high, and then we've got an open door to really crack on and look for some great reward ahead of ourselves. Dollar Swiss, and we are getting through these quickly, guys. Dollar Swiss has done absolutely nothing since a 500, 600 point move to the downside. 0.90 psychological level, round number. We all understand that is holding tight. So again, what we need to say now, guys, and I think we'll get a pullback and then another cycle to take off. So look for 4-hour cyclicity above 0.90. These are all biased to looking for dollar strength. And I think one of the key attributes a new trader or any trader must have is the ability to adapt. So right now we are looking for dollar strength. The markets haven't been great this week. There has been opportunities there, but we've not seen no real clear trend. And if you look across the equity markets as well, they are pretty flat, which can give a knock-on effect and work vice versa. So we've got to also take that into consideration. But look, dollar Swiss above 90 gives us a bit of a kickstart. And you can see that since this strong move lower, we're getting higher lows coming to play. So we are starting to see some sort of progression. How big or how small is irrelevant. But just sit on your hands. Who cares what happens next? Let price get above 90 and then make your decision. Dollar yen has been progressing quite well. And on a smaller time frame, there's been beautiful setups. As you can see, great setup in here. What I personally do, and all of the team does, is when a 1 hour time frame is showing direction but no technical setup, so no pullbacks, we drop to the smaller time frames for lower reward, lower risk, higher reward trading setups. And that's how you can use your strategy and trade it more frequently. There are more bars, more cycles, more opportunities. So look at identifying smaller time frame cyclicity when your higher time frame is running away from you, failing to pull back and give you a textbook setup. We don't want to be jumping on a train that's already left. We've got to respect the market cycle, market cyclicity to allow us to trade at the start of that phase one, the start of the push phase, end of the pull phase. So take that into consideration, guys. And dollar Singapore is following dollar yen in that sense as well. We are getting trading opportunities. We have got an area where price needs to break, as you can see through here. This is in and around the 138 mark. In fact, let's just whack that in there for you guys to see. 138. We've got to get price above that. As you can see, price has failed to break it several times. Sat on it quite nicely the back end of last year. If we break this level, if we break 138, we are in a strong area to look at bullish opportunities. And that's going to have to tie in with a strong dollar. So guys, write that down. If we see the strong dollar, look at 138 breaks, let market cycle, smaller time frame pullback. You may even get a break and retest for some of you. Use that 138 level as your guidelines for further bullish opportunities. Never dive in. Again, pull back, bounce, and use the 20 moving average, use your price action, everything you know or you guys should know to your advantage to cherry pick some top quality setup. So look, there's our major currencies, guys. I just want to put our focus on gold as well. 1975 is a level we took a great buying opportunity from the back end of a couple of weeks ago. We're now in a position where we're back testing that level after 1, 2, 3, 4, 5 out of 6 selling bearish days. So as we work down to the smaller time frame, you can see lower highs are being formed, excuse my drawing, across the board, and we're sitting tight on this area. Yes, that would have been the beautiful trade, but it's not there. And as you can see, lots of interactions off this 175 level previously. We want price to pull back, break, stronger the break, the better. Weak pullback, bang, back off we go. So look, for a couple of cycles below 1975 on your 4-hour time frame, if you miss that, and it is a real strong break and your 4-hour really starts to crack on, then that's when you use your 1-hour time frame to look for your pullback cyclicity to allow you to trade a better quality trade. Cool, that's where we are, guys. That's the plan. Yes, there's lots of opportunities across our cross currencies. Any questions, reach out. Anything that you have in mind, reach out. We're here to help. We do have an open door policy on our trading floor. Feel free to pop down, meet the team, meet the traders, spend some time with us, trade with us, or simply attend one of our events. We do have a live trading event on the 15th of June in central London. All more than welcome to attend. So look, guys, have a great week. Keep an eye on the levels marked out. And look, let's see how strong the dollar can progress or if we need to adapt quite quickly. All the best, guys. Take care. See you soon.